What's going on? All right. Sound check. Sound check. When you can hear me nice and clear, just give me some feedback. Go back to the other screen real quick. How the hell am I? I'm good, John. Thanks for asking. How are you guys doing? Just give everyone a second to sounds good. All right, good. I noticed when I go to the to the cut screen to look at the chat, the sound disappears. So rather than try to figure that out right now, I'm just going to start and we'll go off of this screen. So, how's everybody doing? It is a bit later in the evening. Was going to do a stream earlier today, but got a little preoccupied and figured why not switch it up from time to time and do one at night. Toner, John, Logan, Swift Academy, what's going on, buddy? Frog the Frog, Wolverine, okay. Just going to give everyone another minute. Hayden, what's going on? Make sure that the stream is not having any lagging issues like the last time. Morning from Australia or Austria, Thomas? I'm going to say Australia. Yeah, Australia for sure. Yeah. Yeah, sleeping, this market just ruined it. Can't sleep now, awful market. Yeah, you know, not too much has changed, but I get it. I'm right there with you. You know, it is frustrating, but considering how far we've come, to be expected. I think that we've done this many times before where we'll be like really early into what is probably going to be a longer term range or consolidation that develops. And, you know, when you're like a couple weeks into it, you think, okay, you know, it's got to be over by now. But then if you look at, just for historical precedent, if you look at other consolidations after really long trends, and it doesn't necessarily have to be just in the bull market, because you're going to see just the one sample of the last bull market and think that they have to only last a certain amount of time. And it could just be that this is just like any other small sample size asset or, you know, historical activity. This could be the first of its kind, which is just a longer sideways channel that we develop, a longer range and consolidation that we develop. So not getting I'm not negative about it. It's just, yeah, of course, like the market gets boring when it's like this, right? What's going on, Jason? Hayden, okay. Australia, mate. That's what I thought, Thomas. What's up, buddy? Bitcoin and crypto 5-minute daily update. This is not Josh. This is Kenner and Clark. So I'm going to go ahead and say hi to everybody. So for those of you that are new, please subscribe to the YouTube channel. If you haven't already hit the like button, go ahead and do that. All that garbage that I hate to say out of the way now. This is Ryan, aka Kenner and Clark. Josh Rager is my partner. So we are the founders of Blockroots. We are two full-time traders, and we try to get on the YouTube 3 to 4 times a week. And again, trying to make an effort to do this more frequently as we can. And fortunately, the market has been relatively listless recently. So, you know, maybe we'll have more time to do more of these live streams in the coming weeks. Hopefully we won't, though, because hopefully we'll all be so preoccupied with, you know, a market that is just moving up. All right. But that's unrealistic. Okay. And I don't think that helps you guys either way if we don't do live streams frequently. Okay, so on behalf of my partner, who is, yes, he just got back from vacation. I believe that is 2 vacations for him in the last 2 months, which is absolutely awesome. It's very difficult to get away from the screens. I can tell you myself, it's very, very difficult. I'm really looking forward to getting away this summer, just spending some time golfing and going surfing. We are partners with Femex, so it's actually pronounced Femex, okay? And they actually have a competition that is going to be the final entry for the competition is in 23 hours from now. So if you haven't signed up to this and you do want to sign up, our team is the desk. Last competition we finished top 10. this competition, we're going to try to take it all. And this is going to be solely for manual traders. So I think the last one you could have got in with some type of automated trading strategy or bot or API. I'm not sure, but they did say that, because I don't really know exactly how they manage these competitions. Like, I never do competitions. I think it's kind of silly, but it's fun at the same time. And if the market's not going to be doing anything anyway, like, whatever. But this one's only going to be for clickers. So for manual traders only. And if you want to join our team, like I said, it's at the desk. If you do want to sign up for Femex and take advantage of the contract trading, the free spot trading, so no fee spot trading, that's for a subscription. And then they have a USDT yield generating program. If you use the link below, it's Phemex.trade, you're entitled to whatever type of promotion they are featuring. If they don't give you a promotional benefit, whether it's a sign-up amount or whether it's reduced trading fees, just let us know and we'll gladly make sure that you are that you do receive some sort of welcome compensation, right? Nothing extravagant, but again, as their form of thanking you for signing up. Okay, I want to get something out of the way really quickly. I think I've been posting about this quite frequently, and this is another team that we actually just started working with a lot more. We are in a working relationship with them, rather, I'll say that. This is Genesis Volatility. You know, I've been talking to these guys for a while now. I've always said that this platform is you know, the premier options analytics platform. They're not, you know, I get free access to the platform, so it's not like, you know, I'm sitting here getting paid to tell you all this, but they are a platform that I would love to see do really well. They are a fraction of the cost of SKU. So SKU is, I think, $500 a month, and this is a fraction of that. Okay, I think this comes in around $75 a month, but I frequently reference this. So they actually, if this is not, you know, Blockroots YouTube is not the YouTube platform to use if you are trying to learn options, right? We don't get in depth into any of this stuff, especially the maths or any of the Greeks. You know, I briefly touch on them. I'll talk about gamma, delta. I will talk about 25 delta skew, whether we're talking 20, 30 delta skew. We'll talk about, you know, large expirations from time to time, like we'll talk about today. But we don't go too much into it. We are by no means an options educational platform. They actually just started their YouTube platform. So if you go to Genesis Volatility, if you search that on YouTube, if you go through this or through their Twitter page, you can actually see a ton of stuff that they put up recently that is free options educational content. So if you ever wanted to know about options open interest, what implied volatility is, what skew is, they've put together a great YouTube channel, and each of the videos is like honestly, it's like 3 to 5 minutes long. So it's that perfect, and you know, from creating an educational platform, from creating the order flow and market profile platform, you learn a lot, right? You learn like what videos keep the most attention and how people learn the best. And honestly, it's like the short videos that are straight to the point, that don't deviate too much, and you know that I have a problem with that. They tend to do really well in terms of users retaining that, or viewers retaining that information. So first things first, just to get out of the way, if anyone's new in the chat, feel free to say hi. I'm going to go over Bitcoin. I want to know what all of your opinions are. Okay, I will take some chart requests, and yeah, we'll open it up at the end if you have any questions. Again, you could use that for questions, you could use that for chart requests, whatever you feel like, whatever floats your boat, right? So one thing that I do want to cover, okay, March 26th, this is the expiration that is coming up. This is the highest open interest currently. Okay, so we could see that where this has right now open interest by strike, this is expiring on March 26th. Okay, so this is this $40,000 strike, and the notional open interest, okay, for this is just over $500 million, and this is for BTC alone. So one of the things that comes up frequently is how the options market will influence the underlying spot market, and this definitely takes place in traditional markets. You see gamma effects. There's the idea that there might be options pinning. That's debated, but and gamma definitely has come up a lot lately, especially with GameSwap. And this has to do with how options writers, options market makers hedge their positions. So if you're writing an option, you're selling it. Okay, if you're long an option, you are buying an option, and you're long an option whether you're buying a put or a call. Even though you're buying a put, you're technically hoping that the asset goes down. Okay, or maybe you're not hoping that it goes down, and maybe you're just hedging in case it does. Right? It's sort of like insurance. So the strike that has the highest open interest that will be expiring on March 26th is this 40K strike. The max pain for that level is at 44. Okay, so max pain is a price that Bitcoin would be at that would leave most of the options contracts, most of these settling worthless. Okay, so pretty much just consider max pain for anyone who is looking to have their option be in the money. Okay, or to see their position appreciate. So whenever you have the concept of max pain is that the market will be pinned around this area until the expiration, right? Pinned around an area to make sure that these contracts expire worthless. Now, if you are, let's talk about it very simply. If you are writing, if you're a large options writer and you're a market maker and you're writing all of these, let's say one person is responsible for writing the 40K strikes. Now, that's not the case, obviously, we know that, okay? But if you are selling 40K puts, you don't want them to expire in the money, right? You don't want price to close below 40K, okay? You don't want anyone to be able to exercise those. So it would be in your best interest to keep price above that strike, okay? There are high open interest at other strikes, obviously, besides 40K, okay? It just happens to be that this is the one that has the highest open interest value, okay? This is by contract and by notional, okay? So this has come up recently because, you know, the idea is that price is going to experience, we're going to experience volatility, and price is going to stay kind of relatively confined to this general area. Now, it's not, you know, it's not such that we have a strike that is the upper bound strike that is a very high open interest, and then the lower bound strike at the 40K that is a very high interest, and we're being pinned in the middle of anything. It is just that there are certain people that think that price is going to maybe gravitate towards 40K the closer we get towards expiration, or is going to have trouble leaving this area. I don't like to get too much into that, okay, especially in Bitcoin, because I don't think that it's there yet in terms of volumes, open interest, and whether or not that's going to be that drastically significant on the underlying spot market. Okay, but just think about it like this. If you are the person writing options, you don't want them to expire in the money. So technically you could think about it as, you know, for example, there might be someone that is there, it's in their best interest to make sure that price falls below that value, all right? And then it's in someone else's best interest to make sure the price doesn't fall below that value. Now this 40K strike, this could be plenty of different things. It could be people betting on outright, so betting on price actually dropping. So they're just looking for some type of leverage exposure for Bitcoin to fall below 40K. It could be, you know, miners hedging, right? Just buying puts outright. It could be a ton of things, right? It could be retail hedging. All right, so it's not I don't think that there's anything too conclusive that comes of this. This platform is going to give you all access to this information that you're looking at right here. I frequently will reference the 30-20 delta skew, okay, which is right now it's showing that calls are trading a little bit more richly compared to puts. One thing that is something to be optimistic about, so right after this expiration, so we'll just go a couple days beyond that until we get into April, okay, a little further, we start to see a pickup, where am I, in activity at these higher strikes. So an increase in call activity from 58, 64 up to around 80K. And then we see an increase in activity as well around strikes that are a little bit more local to us. So this is, yeah, it's just is somewhat more upward biased, all right, than anything else in the months of, we'll say in the months of April. So after this March expiration, so specifically the 26th. So let's take a look at BTC, because I just wanted to go through this. I featured this platform many times before, so if anyone was interested, just go ahead and go to genesisvolatility.io. I don't have any kind of sign up incentive for you. no ref link or anything like that. How's everyone feeling before we get into actually talking about BTC? How's everyone feeling about it right now? What's everyone's opinion on where we currently sit? So give you guys a second, might be a little bit of a lag. You guys still there? Got a little bit of a lag maybe? Okay. All right. Glutamatergic neuron. Glutamatergic. Glutamatergic. What is that? Dump. Sideways till June. Long-term good, short-term chop. Okay. Consolidation in a macro bull market. Sideways and up. Got me a little nervous. Is it possible that BTC has already topped out? Okay, so I think the consensus is relatively the same across the board. Is it possible that BTC has topped out? Is it possible? Yes. Is it probable? I don't think so. You know, I've said this many times before, and I try to articulate it in the best way possible. The door is open now for institutional investment and larger players to get into the space. Okay. They don't have the same level of excitement that we do about them coming in. Okay. But just the fact that they are starting to passively invest in the space is really good for BTC. This kind of shifts my bias over the next 5 years very long. Okay. So I think that Bitcoin is definitely going to be going up over the next couple of years. Prices that are much higher than this. That's obviously because it is sort of the perfect asset too, right? It's a fixed supply. It's a very low float, right? Low available supply. You can see it coming off of exchanges. There's not that much available. Now, I say, you know, we're excited about it, but they're not, because now that they have and that they're getting more access and sort of the plumbing and infrastructure is built, they're going to be getting in it the same way that they might get in anything else, whether it's like gold or higher beta equities. If they have a positive longer term outlook, they're going to be looking to take advantage of any kind of decline in price. You know, if they're long only fund, if they're a long only asset manager, especially so, right? They're going to be adding add value opportunities where price pulls back. They're not going to be thinking about it as much as we are, but their effect on the market should add up considerably over time. And, you know, if they, you know, an asset manager getting in is not going to be all of these people that are interested in Bitcoin now and talking about Bitcoin. They're not all going to be like Michael Saylor, right? And put in all of their balance sheet, right? And convert their balance sheet from cash to BTC. But even if they, you know, if we just across the board had major asset managers, pension funds, right, corporates, even if they allocated 25 basis points, 50 basis points, 0.5% towards BTC, that's something that they could afford to just let go to zero. But when we're talking about what that amount of money would add up to, it would have a substantial impact on prices. Okay, what was the value? I think it was $86 million injected into BTC, increases the price by, what was that, 2%, 1%? JP Morgan said that recently. So I don't think we've topped. I don't think that we've topped. I think that we are, you know, a top is, it's relative, right? Top in the short term, top in the long term. I don't think we've topped in the long term. A few things about that. One, there's not really that much volatility up here at all. So tops are usually, they're usually followed by a large increase in volatility before any kind of settling, right? So think about it like if you were to throw a large object into a body of water, right? There would be, the water would be, you know, the surface of the water be really violent for a considerable amount of time until, you know, until at some point it started to, cool down, right? Cool down. I'm talking about water with splash. Settle down, right? Tops are usually going to be on an increase in volatility, an increase in spreads, so lack of liquidity. We don't have any of that right now. Volatility is really low. Implied volatility is back where it was in January. Excuse me, in December, end of December, beginning of January. Realized volatility is flatlined as well. Liquidity is really good, right? So spreads are not wide whatsoever. ATR, nothing to really worry about, nothing that really stands out in terms of standard deviation or movements that are beyond the normal standard deviation. So I don't think that this is a top whatsoever. It could be one of the tops where we have an intermediate roll, where in the interim, we do roll, right? We have a pullback, but by no means does it look like a macro top. Those are typically really violent periods, and they don't just settle down shortly thereafter. It takes a while for it to settle down. So, we have implied volatility and realized volatility that are pretty much flatlined, and BTC is, what is it, like 13% off the high? I mean, that's nothing, right? So that I'm not worried about it being the high yet. It would be the most calm high ever. So, okay. I'm going to go over my thoughts in a second. Recently read a stat, 2 out of 5 Americans plan to spend their stimulus on BTC. I don't know about that, Frog the Frog. I'm not 100%. The stimulus, you got to remember that the stimulus also, to some degree, could have been front ran. Now, I know that it's an actual amount of money that would come into the market and have a meaningful impact, but how much of the market is pre-positioned to that and is in a position that they cannot have the market turn too much against them in the interim? So I'm not 100. That's not something that we could really put a ton of certainty in, like everything else, though, right? Okay. Bear short term RSI divergence on high time frames. Yeah. Okay, so I'm going to go over what I think. Okay. Name of the YouTube channel is Genesis Volatility. So this is their YouTube channel. I'll go ahead and put this in the chat. Yeah, we'll go over everything. Okay. So get rid of this. I don't want to go too much into options earlier. The moment you start going down the concept of max pain on a YouTube that's supposed to be about BTC, and we talk about pinning, it just it's not my technical area of expertise to begin with, and I don't want to put the seed in anyone's head that that's exactly what's causing this price action right now, and then next thing you know, you're going to be parroting something that you learned on Blockroots, and that's not what we're trying to convey. We've gone into gamma effects before, and I think that can have a meaningful impact on the market. But I think that this is right now that price has just kind of lost momentum. So I don't think that this has much to do with the options market, but who knows? All right, so let's take a look at BTC. So first things first, just to put the most important levels on the chart. I mean, if I look at this on the daily, just from a basic trend standpoint, if I look at where we sit compared to the 20 period MA, right? The 20 period MA, your center Bollinger line, in this trend, we've come to this level quite frequently, and you should see that the 20 period acts as dynamic support. Okay, it's just kind of a cool off area for a strong trend. Now, I don't like to see that we come back to this too frequently in a short amount of time. This 20 period is, as I've said before, it's a useful tool if you want to define a bias, right? If we're above, a lot of people say that means, we're in a bull market, a bullish trend. Sorry, I have some indigestion. And if we're below, that the trend is shifting. You're going to see a lot of the times in a strong trend, you get pretty extended from this. All right, it's a lagging derivative price, right? You're going to mean revert and come back to it quite frequently. And the first touches back to it, they tend to be the best to buy. Once it starts chopping around here, it's not like you could say, oh, it's back at dynamic support. This is going to lift off from here. I don't like us to spend too much time around it, like I said, in a short amount of time. So the fact that we're kind of hanging out by it right now does make me a little bit more downward biased in the near future. This is, again, it's just kind of a barometer of how strong the trend is. Okay. If we lose it, right, what we're going to look for is, let's say that price has a significant drop. What you're going to see a lot of the times is the first retest back to the 20. If the market is truly bearish, right, if things have truly changed, this 20 period will act as dynamic resistance. So on the way down, we can see in previous market conditions, it has served to majorly reject us. If we go all the way back to, the initial all-time high in 2017, 2018, this level, right when we started being unable to get back above here, even come back close to it, that was a sign that things turned, right? But remember, this is a lagging derivative, so by the time that you see things have turned, that's not like the optimal signal to go off of, right? That means that you're late. But if you're a trend follower and you're just acting on these alone and you're not adding any discretion to it, then this can be a really useful thing just to trade off of, right? Or rather, just remember to inform your bias off of. I wouldn't say to systematically apply this on its own. So we're hanging out around this. If we look at structure alone, and I give most credence to structure, where eyes are going to be focused on the chart, what's defining the strength of the trend from a structural standpoint. From a weekly standpoint, from the high, so the high up here, the highest weekly close, and then the more local weekly low, and then the previous high that sort of defined our series of higher highs and higher lows. So this on its own, right, is beginning to give us a more short-term downward bias, right? What you're seeing is that, each progress now has drastically slowed down. Now, you could use an RSI to look at to see a divergence, or you could just see that price has made less and less of an effort upward. So that's one thing, right? From a higher time frame standpoint, from a swing trading standpoint, this kind of on its own is enough to justify saying that there is a trade opportunity that exists on the close below this high, or the loss of that, back down to the next major area of support. It's hard. I gotta be honest with you guys. Like in any other market condition at any other period with BTC, it has been kind of a gimme that when you have a structure like this on the high time frames, and then you're violating the previous structure and have lost it. Okay, so for example, draw this a little bit better. Right, so here's the structure we're looking at, sort of like this. So we're on our way to making a new high. This is the level that we've broken, and now we've fallen back below. When we start treating this previous resistance again, that should have acted as support, right? So we should have held the high of that. When we start treating the underside of that as resistance, again, so as we have over here, a lot of the times on a weekly structure, this trade has been a gimme. All right, which means this is the kind of trade where you want a sub account so that you don't have, your scalp account open looking at, the lower time frames and throwing yourself out of what might be a very obvious swing trade back down to this structural area. Because more often than not, in previous conditions, you would cover this gap over time. Again, it's not going to happen on the 4 hour, the 5 minutes after, the day even, but more often than not, when you've lost and fallen back below this level, you've targeted the midpoint. And if you had trouble at the midpoint, you came all the way back down to that structural low. Okay, remember, this is, as I've said before, I've used the term key contextual level, right? In this sense, this is a key contextual level that defined upward progress and trend continuation. And now, since we've fallen and treated this level back as resistance, is a key contextual level that allows us to define contextual risk reward and say, okay, so this level now, I'd say that this 59 level is probably the balls to the wall long for me from a higher time frame standpoint. But this level now is so close that in terms of contextual risk reward, this is an attractive area to define risk, right? This is such a small area compared to what is setting up that if I'm looking to define a trade, I know that my stop being above here is a really good invalidation. Okay, now mind you, you're entering the trade here now. Your stop is going to be much wider. But what you're looking at, if we're just looking at this from, very binary if this then that, right? Excuse me, that came out kind of weird. Then you're looking at a trade that is it's not one for one, right? It is, if you had a pullback back to, and more so, obviously, if you got in already. So it's not the best time to just hop in this right now. But if we pulled back to this level, struggled there, you could define a position there quite reasonably. Okay, and you have a trade that's almost 1 to 2.76, right, in terms of risk and reward. And I say it's a good contextual level to define risk because, again, if we're back above here on the higher time frame, then it's so clearly that this short setup is a poor setup, right? That's the invalidation if we're printing market structure above this area after we've been rejected from here. So this is when you're looking at it on the weekly, right? But in these conditions, you haven't been really granted that sort of, if we lose this level, then we're going to magnet all the way back down here, right? The infamous magnet that everyone uses that has mostly worked to the upside. So in these conditions, I expect to find support sooner than just, oh, okay, we lost this. Now let's just start writing this off and start looking back to these levels to revisit. And again, one at a time. So we have to go down to the daily, all right? Now, this is clearly, it served its purpose as resistance so far. I think 53 to 52 is a pretty reasonable area to expect that we could potentially find support. Now, I don't really like the way this is shaping up right now. This very tight daily structure that we have, this could set up a really nice break from balance over the next day, maybe next day and a half. But there is reason to assume that this area could act as support where we could come down a little bit lower, find support, and then end up retesting this weekly level. Now, just to give you an idea of what we're looking at between these two structures. So we'll put on the volume profile visible range. Okay, zoom in a little bit. Go to the 4 hour. Okay, here we go. Makes things a little bit better to look at. So range, okay, area that's ripe with liquidity, area that where there has been value established, buyers and sellers in relatively friendly conditions, even though it hasn't been friendly for those who have taken directional positions, right, in terms of certainty, but it's allowed you to get in. There's been enough activity there two-way to allow you to take either direction, regardless of whether you're right or not. Okay, and then the next area of interest, back down here. So we're just looking at really the areas where most of the activity has been isolated to. So the areas where there's no activity and where you have drop-offs, okay, these two levels right here, this is where price did not spend much time. This is where price passed through relatively quickly. It's really kind of the only gap that we have in the chart below us right now. So this little pocket. So that 53 to 52 area, and don't get hung up on, the specifics. This could reasonably act as a support level. So if we come into this level, we could expect that maybe a bounce develops from here. It might not develop from where we currently are right now, but if we were to wick into here, I'm not going to write anything off until we start falling back below, back into this. As I said in previous live streams, notice nothing's changing, staying consistent with that. As long as we hold above this consolidation, there's no real reason to get overly bearish on this. What you really have to do is remind yourself that you're kind of in a higher time frame range, right? What you have is you had a range down here, you have a range that was developed up here, right? Meaning this is where value had been mostly isolated, all right? Now, where price didn't spend much time in these two areas, okay, where price didn't spend much time right here. So if we start reaccepting back into this level, yeah, you're probably going to start ripping up to these highs again. But below us, all right, this 52 to 53 level seems like a good area to expect a bounce, all right, and that I would want to see defended. The same thing, slightly lower in this little gap right here. Now, if we go into the daily, that's right around the daily level. I wouldn't want to come all the way back down here, honestly. I don't want to retest this daily level down here. I would say that if we, because there's a lot that took place in those wicks, if we started falling below that 52, falling below this level, I would assume that you might initially get a bounce off of 49, sort of 49.5, 50,000. But trouble there just brings you back within this prior range. And then I would expect that absolutely you're going to just take out these lows. Okay. Now, again, if we just look at this from a sideways profile, you see that most of the activity has taken place in these areas. So this little low volume pocket, this whole area right here, that should act as support. Now, if we start drifting into this, slowly coming into this level and favoring it, then I would immediately start looking lower. I wouldn't anticipate that price is going to find support by building it over a long period of time over here. If anything, we want to see that you have something where, for example, maybe price does something like this, wicks into this level, and then suddenly is trading back below this low right around 54. To see it quickly leave this area, right, not be accepted as lower prices, right, if buyers immediately bid this up, and then this trade back above 54 would be a good sign. I wouldn't want to get in position right here. I definitely wouldn't want to get into position right here. We'll go down to the daily structure and take a look at that, but where it's sitting right now in terms of on the lower time frame, how it's developing, I think that it's very easy for this to chop around a little bit longer. All right, maybe come and test this previous cluster right here and then still make an effort down towards that 53 level. I wouldn't be just buying this dip hoping that this is the dip. Okay. Let me just go through the chat and I'll go back. I'll go to EXO. So let me get the profile off. Clean this up. So just the important levels again. So lost, fell back below within a prior weekly range. So that is below. We're looking at 57, right around 57.5. So lost these highs. All right, you're targeting more often than not the midpoint of this range. So if we just look at the low, and it's going to all line up when you use other tools as well. If you use something like fibs, if we went from this low to this high, that 50 level, where'd my fibs go? Okay. Okay, so that 50 level is right around 52.2. So this pocket should act as an area that we see a bounce. Again, wouldn't just want to buy it right where we currently are. And that's just from the weekly, right? The 50% from the high to the low of this entire structure, it's all around the same general area. I don't really, I don't use fibs too often. I will pull them open from time to time. But this just to show you that there's confluence at this level. And you could see, this is clearly the area that price had trouble with. Ripped through, retested. So maybe third time's the charm. Again, one thing that you wouldn't want to see is that, let's say that price does this. Let's say price comes back up here, fails again, and then is back down here again. Then I wouldn't anticipate that if you have 1, 2, 3 tests and you're hanging out around here, I wouldn't anticipate this level to hold. I would just start immediately looking. I would start looking back down at 50K. Okay. All right. So that should be relatively straightforward. I think that honestly, it helps to have just to be, I guess, offer some advice that is not financial advice. None of this is financial advice. It does help to have sub accounts because, for example, I will, even myself, I will look at something on a high time frame like this, and honestly, once I start seeing this, I start setting myself up to hedge. All right. So once we start having a meaningful close back below that weekly level, okay. So it got really choppy over here. Okay, I initially hedged back here, got out, so I've taken plenty of shorts, but was looking to put on a meaningful hedge. Once we reclaim this, wasn't too sure, but when you start falling below here, there's a good reason that, someone might say, hey, I want to start hedging this, because all it is, it's a sign that, we've made less and less progress up, and we're starting to violate previous structure. So what do you do before you start changing the trend? You start changing in terms of the effort that you're able to put towards making higher prices and respecting those previous levels. So this is a sign that we are not respecting those previous levels. By all means, if this was really bullish, and it's not like it changes the trend, but if this was going to maintain its bullish in the short term, this breakout right here probably shouldn't even came back here. Honestly, you don't want to see that. If it's very bullish, it's not even going to give you much of a pullback. But if it did come back, it should have held after this. So the fact that we fell below, had this deviation, and then reclaimed, and then fell below again, I think it's all pointing to something that is losing momentum very clearly. And having a sub account allows you to see something like this. Okay, and Femex has the sub accounts, but I use multiple exchanges, and they know that. See something like this, say, okay, this is actually a nice swing trade that I'm willing to take. You know, earlier on when it's setting up, this is a nice swing I'm willing to take. I'm going to target down here. I'm going to leave that trade on. I'm going to get away from that chart now. I don't want to even look at the P&L. I set my stop, and now I'll go trade the intraday. And when you have a separate exchange account, you know, you're not looking at this while you're trading your 5-minute chart and thinking, oh, you know what, actually it's starting to turn in the 5-minute, and then you're starting to think that, you know, things have changed, but they're not, right? The structure is, we have to be 100% honest, it is looking, you know, like it is ready to move sideways for a little bit longer than maybe everyone anticipated. All right, so that's just from the higher time frame. Okay, again, it's not complicated, you know, where most of the interactions have occurred. Okay, you're looking at, I would say 59. Now, let's say that after all of this, we're back above 59. I'd probably get as long as possible across the board. That is just so clear to me that this is going to make a significant move up to, I would say, right around 65, 67. And that's if we're above 59. Right, so salvation is right there. Okay, and at that point, it's very obvious though, right? You know, what you've done is you've had that retest deviation multiple times, probably trapped a lot of activity down here, and you're just putting in a very bullish market structure, trading back above this level now. All right, and then you're back above that weekly level. And then your next level, that pocket right here. So this is, by all means, it's actually a pretty attractive higher time frame range. Setting up, if you're willing to treat it like a range and not just consistently try to approach it like this market is just going to trend, you know, ad nauseum, right? Ad infinitum. Okay, not ad nauseum. That would be how I repeat myself, ad nauseum. But if it was going to trend forever. Okay, let me just look through some of the comments, and then I'll go to EXO. Stimmy is more likely to be priced in. Yeah, I think Pedrig, I think the same thing. When I was trying to say before about stimulus being priced in, you can't say it's priced in that, you know, it hasn't been realized obviously by the stimulus money hitting into the market, because what we're saying when it's priced in is that people have bought in anticipation of that. So I don't know if, yeah, sure, if all that stimulus money found its way in, or the amount that even was potentially going to find its way in, that would have an impact on prices. But I think in terms of markets overall, I think the market prices in the fact that there's stimulus always coming, which is another can of worms to go into and open up for a different chat someday. But I don't know if we've seen a ton of retail activity pick up on spot exchanges in the last couple of days. So they say it's till the 24th, the last people get their checks, so we'll see. But it doesn't look promising right now, right? How far can XRP really go? I don't know, man. Not below 0. That's all I do know. Yeah. Okay. Cool. So let's look at this on the lower time frames. I don't spend much of my time focusing on the higher time frame chart. You know, when I'm looking at a chart like this, when I start to see this happen, I just start thinking, okay, I'm probably going to hedge my larger spot holdings. So I'll hedge with futures. But I don't frequently go for big. I'm not looking for big swing positions now to the downside until we've had some type of much more obvious failure than this, until we start losing levels at the low that we put in on the way up, and maybe something else changes that I'm not aware of right now. But I don't want to start gearing myself up to take a big short, because what's happened the entire time has been shorts have gotten punished, right, when they've held on too long. So if anything, hedging is something that I would do though. But looking down on just the intraday, okay. So yesterday's structure, my drawing tool is going to be being a pain in the ass right now, so I got to pull it up real quick and put it on the front of this, because it turns off when I'm on Exo's platform for some reason. So yesterday's structure finished as a pretty strong trend down, right? So most of the volume at the high, most of the volume up here, lost that level, lost this ledge of the previous day. And right now, you know, if we were looking to have somewhat of a bullish bias in the interim, just looking for if I'm looking for long opportunities locally, I don't really have any right here, unless I see something develop on the low time frames. So for example, when you have a single print level like this, so we're looking at, let's say 49,950, and this goes up to 55,363. So that single print area right there, technically that could be a gap opportunity to play. So that is really just gaining acceptance above this level and then to this point. So if we see, and this is the single print right here. So price has been rejected from this level now 3 times. If we're able to trade back above this level, there might be a very quick long opportunity back up to 55.5. All right. Just the idea of playing the acceptance into this gap again. There's really not much that took place in here, right, on the way down. Pretty bursty short-term price action, fast move, okay? So if market gets accepted back in this level, you should see it move pretty quickly. Now, when you have a gap like this, and you have this rounded rolling structure into this gap, a lot of the times, this might be your first target, but you're probably going to come and take one of these highs up here, so around 56. So that is the closest long that sits above us, in my opinion, just from what I am looking for. Other than that, I would say that this low, since it hasn't been swept, and this might be on, so this is the BitMEX chart though. So I don't think, so this low has not been swept yet. So this low at 53,190. So remember, this whole area here was where we said we could see price maybe develop. So if we see that price falls below this level, so we take out that liquidity down there. So we trade below 53, what was that, 53,120 area. And it's probably going to bring you into 53, right? It's going to probably bring you back to that pocket that we had originally. If we see that we take that out, so something like, I wish I could get the drawing tool to work perfectly with XO. So if we see something like this, take that level out and then start trading back above 53. Honestly, if this is the development so far, and you have most of the activity that has occurred right now around 54.6, I would probably look for a long opportunity from 53 to 54.6 area, just looking back up to this next sticky point. Again, very short-term trades, right? These are not, I wouldn't say that these are, they're scalps, but they're not, they're very short-term momentum scalps, put it that way. And then back up here, so if we just look at what we have above us, so for the last 2 days, so we had the prior day open, make an aggressive move down, single prints rejected, close back above the volume, where most of the activity came in. That's fine. So this level was rejected, which was, this single print area down here, this was an area where if you gained acceptance into this, you were immediately moving, it was very likely you're moving lower to begin with. So once we started trading back into this 55 level, without a quick response, it was more than likely that you were going to come down and test these lows. So, or rather get as close as possible to these lows. We didn't get the move all the way down, but it was close enough. But you don't want to see that you gain acceptance into a single print area like that, especially with the way that we've been chopping around up here. This should have been or served as an area that rejected price, and we shouldn't have revisited it, and certainly don't want to spend much time there. But if we look at the last 2 days, and just combine these, this is an area that will more than likely act as resistance right around 56. I said that you have those highs up there, right? So from 56 to 57, this could be a pretty sticky area, right? So for the last 2 days where we had trouble, the point of control is right around 57. Okay, so that puts a pretty strong line of resistance right around here. All right, so you have, one sec, bear with me. Okay, so we have the point of control, and then this right here is that weekly level. So this whole area right here, I would not, so you have a long opportunity, In my opinion, I'm willing to take anything from there to there. Right, again, you could take out those highs above. Okay. Let me put on my session profile for this too. All right, so I would expect this area to act as resistance. If we start trading, like let's say that you do something like this. So market makes a pretty high conviction move back up to this level. All right, let's say we take this high, something like that, and then the market is hanging out around here. This and this are pretty similar. You know, this is it's a decent amount of activity there, but it's mostly from, if I turn this off, so moving forward from here, there's actually not much activity there. All right, that's mostly from here. Okay, so low volume, low volume. This is your only high volume node between the two. I hate it when it's that setting. It's so ugly. All right, one sec. So, I mean, why did it, oh, come on. Row size, that's why. Value area volume. What? Okay. So you have two pockets. One right here to here. And if you take this high and you're hanging out above here, and you have something that looks like this, and you're not falling back below into this gap, then I think that this and this are roughly the same. So you could get the full move back up to this 57 level. But now you're moving back up to the weekly level and where most of the volume had been transacted over the last 2 days. So pretty sticky area, honestly. And it wouldn't change this structure in a way where I would just be longing resistance, because what you have now, let's say the market moves sideways, breaks up, rips up into here. This could very well be something that, again, puts in, you know, your next lower high, right? And then you have this triangle that has been putting in lower highs, favoring the lows. And it's sort of like, if we go back all the way to here, reminds me of something like this. Right? If we just zoom out, we look at these two structures. Now don't get hung up on all the details, but the same sort of activity. W bottom, so high, W bottom, not a nice W over here as it is over here. Okay, high, W bottom, and then this lower high structure sequence of, you know, this sequence of lower highs, but favoring the lows, right? For, in this case, maybe coming down and still taking out that low. So again, there's a strong case to be made for support being below. So there's no reason to think that, you know, this low and this low has to be, you know, we have to come all the way back down there. One level at a time, right? You lose this level, then we could start being more biased towards these levels down here. But as long as we're above it, you know, could just be chopping around. Okay, go back to, and then again on the, in terms of the levels below us, you have right around back down at that, right below 52. You have these naked points of control right around 50,800. So you do have some temporary pit stops that price might bounce off of. I wouldn't expect too much from them. I mean, maybe this, if we look at these last 2 days, right, the days that led to this strong trending move up. So these two, that point of control from those 2 days is around, and I say naked point of control because the 1 day from the 8th is a naked point of control still. We haven't interacted with it. Those combined, so the 2 days in total where that activity was, leave us with a point of control right around 50,850. So it's around that. Again, there's a whole area of confluence around that daily level and these lows. All right, daily level is a little bit lower. I would probably rather see, in these conditions, I would rather see the first level act as support rather than looking for the deeper supports. I think one thing is clear in strong market conditions, you don't come down and test the lowest possible supports, right? You want to see that the dips are they're as shallow as possible. So if you have, a weekly support here and then a daily support all the way in the structure, just from looking at this on a higher resolution, lower time frame chart, I would expect that you would just tap into this level in bullish conditions before resuming, right? Or that rather, you should get a really good response out of here, okay? And then you could have something where, maybe you're putting a low over here, and then you have something that is forming, some type of, it moved, some type of channel. Who knows, right? To be determined. Okay. Yeah, let's go over some alts. Joke Nicholson. I'd say from here. I mean, if we flip this 55 level and regain acceptance into this, yeah, you're probably coming up to 55.5. So we'll see. Unless you get something where you take that high and then who knows, right? I don't try to guess. I try to seed my setup if it occurs. All right, so let's take a look at some alts. What alts would you like to see? Share some in the chat. So today, BTC and equities were not correlated in the same way that they have been the last couple of weeks, which is interesting, right? Because there has been a strong correlation with all of the uncertainty and sensitivity that treasuries have had on the market, or rather have created. Okay, so Bell, BTC, let's see. All right, I saw Kev. ADA is breaking out. I'll check it out in a second. ADA moved sideways for too long for me to care about it that much. But I'll check it out. No, I'm teasing. It's been doing well recently. All right, so this is actually this is the kind of structure that I want to see developing if I am considering getting into an alt to begin with. So multiple lows, right? Progress below. Now starting to make headway in the opposite direction, right? So it's starting to reclaim some previous levels. So for example, this level right here, this weekly level, you zoom out on the daily. So the market puts in a low, puts in a lower low, and now finding support back above that previous weekly low. Now, obviously, this is becoming a very clear. I'm just going to put that angled line down, even though it's more like this is really this general area right here is acting like your range high. So in this kind of structure, the fact that it's really clean makes it actually pretty attractive. So this is against BTC though, right? This is showing that it's gaining strength against Bitcoin, or at least it's not losing against Bitcoin. So now if I'm going to be bullish on this, it's when we reclaim the top side of this range, right? So when it's breaking out against Bitcoin, which brings it above, right around, we'll say that it's probably legit above 8K, right? So above 8,000 sats. So maybe you get something like this, break out above, and any kind of retest and hold of this area, it looks onwards and upwards from there. And then you have, this is what it's like a head and shoulders, right? So the confirmation of that would be the close and retest above. So actually it looks good, right? Later, Swift. Swift, before you head out, man, I'll look at Kava if you didn't leave already. Kava against BTC the last couple of weeks doing somewhat well, but rejected again at this same level. More importantly, let me look at the USD chart, because a lot of things have been suffering against BTC. Kava was one of our better plays in the newsletter early on. So in terms of just weekly levels, okay. Now, this area right here, previous weekly high, so all-time high weekly, just recently overtaken, previous weekly high leading up to it. So this area should act as support if this is going to lead to continuation, right? So this, we'll say right around 511, worst case scenario, start falling below there. Best case scenario is you don't fall below, actually that's 474 right down here. So you want to hold between 5 and 475. This should act as support. Now, if you start falling below there, you're just looking to fall back down to these previous weekly levels. So 333, 260, and then this does what many have done before, right? Puts in the same pattern that it did, a roughly similar pattern previously, where it just goes on to move sideways and have a substantial pullback again. I don't want to see that all start falling back below the previous high the same way it was uncomfortable to see ETH do that. ADA. So ADA is, didn't you just say ADA was breaking out? I don't know what you consider breaking out, buddy. Let's get a longer term chart. All right, use this. So that's on, okay, so this is only on Coinbase that it looks like it's having a big breakout. We'll put on the higher time frame chart to put things in perspective. So looks like it's flagging on the weekly, right? This is your range on the weekly, between 133 area and around 1. All right, so from a weekly standpoint, okay, get a little bit finer down back onto the daily. So this low is the low you want to hold either way. So from a daily standpoint and a weekly standpoint, this recent weekly low, say around $1. You don't want to fall back. I don't think you would want to fall back below $1, not just because it's a weekly and daily level, right, that line up, but because it's a pretty important psychological number in terms of, I think, keeping the upward progress. This whole area right there, not much substance to it. So if you start gaining acceptance back into that, you could fall quite a distance. This is not really breaking out. It's breaking out of this short-term consolidation it was in, probably because Bitcoin is too, right? ADA is a higher beta than BTC. So ADA is just slightly ahead of Bitcoin in its progress on the low time frames, in what Bitcoin is still doing. So this is not a very attractive chart. A lot of charts look like this right now, though. Like SUSHI is probably the most annoying chart right now, and I'll go into that in a second, because it's just breakout after breakout and failure. So breakout, right? Breakout, and then this is just turning into mush. So, but it's done this before and then marked up, so it doesn't mean that it has to roll over. It's just frustrating, right? I don't think, I don't want to say ADA is too risky. All crypto is risky, right? But I'm not interested in ADA. Oxt, KOXT. So we could very well start seeing some substantial pullbacks across the board with alts, because a lot of these are doing similar things in that, a previous significant high that's put in, where we put in a move above that high, but it's not really much. It's the same thing as Bitcoin, right? A strong trend looks, you know, very strong in the beginning, and it weakens. You can see that it weakens with just the naked eye, right? It's starting to put in smaller and smaller legs and start to come closer and closer back to violating previous structure. So this, you know, you get a breakout, and then price is back down here at this level. You know, with alts, I'd rather see that this leads to continuation, right? It flies, rather than kind of hanging out around this level again. But this is only 2 days into this pullback. But we could see across the board that alts maybe have a bigger pullback setting up. Swirl, yeah, I'll take a look at Swirl. Okay, maybe that's on no, I don't even know what Swirl is, but not popping up. Any trade you would do right now? No, not off the top of my head. I mean, I was in, let's see, in the last 24 hours, I've been in, I slept on, let's see, I slept on a short. That was that yesterday or today? I actually slept on a short, which actually turned out really well, but I hate doing that. And I was I don't know, I don't like sleeping on positions, but it worked out. I had my TP. But today I took three shorts today and one long, and the long didn't work out. The shorts did. And that's just on BTC. That's the only really thing that I'm looking at right now. Alter looking pretty crappy. Someone asked for sushi, and so I'm 3 for 4 today. The long, I took a hit on a long, and that was right. Where was that? That was pretty close. Where was that? That was oh, the long I took back here. Yeah. Was not happy about that. So let's look at sushi real quick. Sushi, super frustrating. I mean, it's dangerous to say structure like this looks like it's going to roll over, because this kind of looked like it was rolling too, right? It starts to sort of fall over, lose a little bit of its aggressiveness to the upside. But, you know, still market structure, weekly level, kind of up against it right now, so not the best look. So that's that previous weekly high. And this whole structure is kind of chock full of fake outs. 1, 2, 3, 4, right? I mean, they're micro breakouts, but not really much progress. So, I mean, this is, I think we could be seeing, you know, we had a couple pullbacks with alts, but I think you could see large pullbacks setting up. Uni is really strong, honestly. If you look at it against BTC. But Uni, the same thing. I mean, Uni looks honestly like more like it wants to break out. I mean, to be fair, this came off previous weekly. So previous weekly support, kind of hanging out down here, deviation into that level, treating it as support again. This whole area being respected. And yet, one thing I would say, guys, like, don't, you know, I mark out weekly, daily levels and all that. Zoom your chart out, though. Go to the 1 hour chart. Go to the half-hour chart, whatever your resolution allows for. And look at where most of the activity and interaction occurred. You know, because you could have a daily structure that there was this kind of activity in the wick, but, you know, opened here, moved up there, and closed down here, and this doesn't look significant on the daily. But there was all this activity that took place there. So zoom out on the 1 hour chart and see, okay, no, there's a lot of activity down here. I don't know if this is a daily, a weekly, a 4 hour level, if it's going to show up on those charts, but it certainly shows up on the chart, right? So very very obvious it would be an area that would act as support on the way back down. This Uni looks like I don't know, just making its way up. I mean, if you look at this on the daily, this kind of looks like it wants to just break up. But I don't think, I think that if alts pull back across the board, like let's say BTC pulls back more, I think alts are going to suffer a lot more. And I think that a lot of alts have started suffering. Oh, it just ripped? What just ripped? Oh shit, sorry guys. There you go. 55.5 you're looking for. So the single prints are, sorry I wasn't paying attention. The lows are, the single print level is 55.5. So let's see if we get the squeeze up to that level. Let's just double check that. Yeah, it's right here. Nope, it's actually not. It's actually, oh no. Why is it, was it because, I was looking, I might have been, it looked like a really clean single print. It's actually not a single print. The single print is right here. This is a low volume area, so it's same kind of concept, honestly. But if you look at it now, so if we go to the 30-minute, your single print area is actually between here. Oh yeah, it was. So the tick is just, all right, so it's not, yeah, it's okay. So I'm on, that chart is, okay, XO is Bitmax because the platform doesn't have connection to anything else yet. No, I'm looking at Bybit. So this area should act as initial resistance. So if, you know, just to give you an idea of what I'm thinking, if we, so this pop is kind of expected. I would say it was definitely expected down here. But now if we reject here, I would just look for, if this is going to put in a low down here, I would expect that a range would develop somewhere in this pocket. Or you could have a few, you know, you could have a day, so maybe have an inside day down here, or maybe have an inside value rather. So if most of the volume ends up getting distributed down here, we just have a balanced day that open, you know, let's say today, because today is in development. Today balances out, and we have a pretty respectable high and low. Then I would just play the break through that level, me personally. So just to give you an example. So here's where we're developing today. All right. Get this off. So there's not much going on yet, right? But let's say that, for example, we have a day that ends up looking more like this. All right, pretty balanced day. If we get a break through that balance, right, we don't see price immediately rejected again from the high. Like let's say we get rejected from the high up here now. So imagine that this gets rejected, and then we come back and we're back in here. If we start moving sideways, and again we start gaining acceptance back up towards this rejected level, I wish my drawing tools were working properly right now. I just changed my mouse speed. Hold on a second. I'm about to lose control of the mouse. Say something like this. Let's say this gets rejected, falls below, moves sideways again. If we're starting to trade back above this level, then I wouldn't expect this area to act as resistance again. I would start just aiming directly for the high, around 56. But just again, as a reminder, this is your gap right now on this chart, and there's a little gap right there. Right, so if you claim back above here, then I would say you're targeting 57. So as I said earlier, so we're almost, I mean, what do we have? 55.34. This looks like, I mean, let's see what it looks like on the footprint. See if you're getting some selling coming in and it's holding up. Come on, man. XO platform. Move this because that one's not loading for some reason. I mean, you have, so, one sec. Good amount of selling right here. Price closing above this. So managing to hold the volume that's come in so far. And that was right around 55, 100. Right? But now in this pullback, where you would want to see ultimately, you know, what you're looking at is, let's say you get a pullback. Let's say that you come in all the way and retest this level, because you could very well find support there. You want to see that is sold pretty hard. But up here, we could have that same selling occur. So you could have right in this level, one sec, delta ladder, no. There we go. You could see that maybe selling comes in right in this area. But that's not the case right now. So honestly, this kind of selling at the high, I typically expect that gets pushed. So when you have selling come in right at the high, I would expect that we're going to push through that. So best case scenario, though, is let's say that price starts moving up and we start seeing that selling is coming in, and then you get something that looks, you know, it just adds to your confidence when you see that something looks like this, right? And you have a lot of selling that now, you know, price is trading at X, but you just had all this volume come in at the bid and price is trading above it. Now, as I said, when we have selling come into the high, right, someone try to smack this immediately right there, I usually expect that to get run. And you're normally looking for a high to occur on lower volume, up at the high by aggressors, at least sellers rather. So we'll see. Small play either way. All right. When I would short, and then I'm going to wrap up the stream. When I would short, so I mean it depends. Like I short all day on the intraday. You know, if you look at my trades, it's probably pretty even across the board. And it's probably, you know, right now in this market it's skewed to the long side, but I might have, you know, 550 longs and 500 shorts in a month, right? That's trading on very low time frames. That's me on, you know, the tick chart, looking at the ladder, looking at the footprint. In terms of like placing a larger short, I would say that you could justify selling this level again if you see that it's acting as resistance, right? We start coming with, that sounds kind of stupid, right? If it starts, you know, if it's resistance and it doesn't go through, sell it. If you start to see that price is kind of petering out up here, having trouble at that 57 level, and if anything, making its way back down to this low after being tested for the second time, I don't know, I might consider hedging. You know, that's if, let's say that we move up to this before coming to this 53 level. I think the best case for me from the long side would be if this doesn't even go much further and we just come into this level and then trade back above here, right? So tap this area of support, leave it pretty quickly, and then we're trading back above a low. So you have one low, two low, maybe something like this occurs, pop, tap that, and then now you're starting to make progress to the upside. So really, you know, it's something that looks like this, right? So here's a low, and ultimately what we're looking for is a higher low, right? This is the higher low compared to this lower low. And that's within immediate market structure on the low time frames. Okay, if you just continuously fail, and you know, let's say we lose this low on the high time frame. I don't know, honestly, it's hard to say. Like, I have areas where I would hedge, but I don't know if I would outright. When I say short, and I'm talking about this right now, I'm talking about I would not really go for a short that is more exposure than what I have. I would probably just be more prone to hedging at these areas. I tend to cut shorts a little early in this market because I always anticipate you're going to get penalized if you hold past the first level. So unless we've just recently lost a level, unless we have, you know, unless I'm trying to skim the highs, like a take of a wick, then I feel like if you've come to the next area of support with your short, so like let's say you're short from here and you come all the way down here, I feel like it's really dangerous to hold this, anticipating, you know, the big change on the high time frame, you know, anticipating coming all the way down to, 45. Some people will do that though, but then price rips against you so many times it makes it hard to hold. So, yeah. So let's see. Discord. Now, if you go to blockroots.com, what the hell? It's all caps. If you go here and you join this, then you could enter in our community. Yeah. Yeah, it's tough for me to do this stream with the EXO right now and talk about the footprint because it's not my setting. I have the EXO for the YouTube until EXO has their full platform up and running. But again, I've been using, I'll just open mine again to show you what I'm trading off of. I've been using Quant Tower. I love it. And I have it set up to really optimize trading on the lower time frame. So I have, let's see, I have, just close this. Hopefully this loads. 500 tick chart right now, or I'll have a 500 to 200 or a 100 reversal chart. One sec. This is going to take a second to load. You can see on this side I have my TPO, but I don't know if these are going to load right now. Connected to Bybit. Pain in the ass. Of course. I would reload this, but then that means I have to pull up my my account. Does anyone have any other questions? We'll give this a second, then maybe it's gonna be worth calling it. Yeah, 55.3, huh? I mean, that could be the extent of it, and we could be moving back down towards this low. What is going on with this? All right, I'm gonna give up on that because it's taking too long. All right, guys. I think that covers it. We've been at this for like an hour already, about an hour and a half. If you guys, want to join the community and learn more about market profile and order flow, go to www.blockroots.com. Check out our partners and our friends at Femex and Genesis Volatility. Glutamaturgic. The community, so we have a Discord, is accessible if you join through blockroots.com. So if you go to start learning, this is where the market profile and order flow course is. And yeah. All right, guys, everyone have a fantastic evening. I will talk to you all soon.